JJ Kinahan, let's talk about bank earnings. We've seen Goldman, Citigroup, Wells Fargo, JP Morgan, all have bounced after their earnings. Should investors stick with it?
Well, if you're somebody who believes that we're going to continue to rally, I think absolutely financials have to lead the way. There was a lot of positives. I mean, obviously, as you said, the stock bounced, so the market saw that. But a couple of the ones I really want to highlight out of what happened from the financials. Number one, good to see the king back on top, Goldman Sachs. You know, psychologically,
It's a big beat.
It is a big beat, and psychologically it's good. But what's really impressive about what they did is they did it on light trading volume. We know this is not a great quarter for trading, you know, you see from the exchanges and everything else. So for Goldman to come out and do that well is actually shows how well run a company they are. The other thing I think that's helped all the banks is what, you know, Jamie Dimon stressed in their earnings call. The mortgage market is not hurting them anymore. In fact, quite the opposite. Mortgages help significantly on their bottom line. So to say that we're out of the trough, so to speak, in climbing in an interest rate environment where you're seeing a 30-year at just under 3%, for these banks to be able to make money on interest rates for mortgages is really a great testament to how well run they are right now.
So the financials have helped lift the market and themselves. On the other hand, you have big cap tech, which has been struggling. IBM sold off after its earnings. Intel worried a lot of people. What should people do with these stocks?
Well, I think that there is some worry there, you know, and one of the things that I thought was interesting about IBM's earnings call that was different from what we've seen from others, and the thing to really pay attention from all the other earnings calls that are coming out, is what they said North America was actually slowing. And the rest of the world, you know, Europe we all know hasn't been good anyways, but China's slowdown didn't hurt them nearly as significantly. So I think it's interesting to see what the rest of these companies will say, because that doesn't really necessarily jive from what we've heard from other industries, where other industries said that North America was actually growing and helping them significantly, you know, say one offhand just to Coca-Cola. And so I think with the tech earnings, it's going to be very product specific. You know, the other thing you have to keep in mind with IBM, they have kind of switched from, you know, their entire business model over the last few years. It's an incredibly important company still, but I think that, you know, if you're looking for companies to really buy going forward, I would kind of focus on ones that have been in the same industry or the same business model for quite a while.
Well, there's no business machines left at IBM,
Right.
But Apple does make products. A lot of people are confused right here what to do with Apple. What would you do?
Well, I got to say, if one of the things I would do if I, you know, being long Apple right now is I would certainly buy some downside protection or protect myself somehow. What I mean by that is probably an out of the money put in some sort. Now, you got to remember, a $600 stock, you're going to have to give yourself a pretty good range, maybe a 10% range before I did that. The other part of it being Apple is so psychologically important to the market. You know, people really look up to whatever Apple does in terms of, wow, this is incredibly important. We need the stock to go higher. I actually think that the market needs Apple not to go higher because it is a big part of every index, as much as psychologically, from the tech point of view and from an overall country point of view, I think people really look to Apple to be the leader, not just in product, but in the market itself.